Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, March 27th at about 1:30 p.m. Eastern. Well, the Dow Jones Industrial Average tumbled today, falling into correction territory, while Brent crude traded above $110 after incidents in the Strait of Hormuz exacerbated investors' energy supply concerns. The S&P 500 Broad Market Index is headed for its fifth straight weekly decline, down more than 1%. The tech-heavy NASDAQ has slid more than 2% week to date, while the blue-chip Dow is down around flatline for the week. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today, as you can see, when I captured this chart, the SPY was trading at 638 even, 9% below the all-time highs set in January up here at 697. And we can see we had that too. It's trading below, as you can see now, it's trading below the 20-day moving average. 20-day moving average right here, the red line, coming in at 666 and change, below the 50-day moving average, the green line, which is coming in at 679 and change, and below the black line, the 200-day moving average, coming in at 661. Now, you can't see it here, but we know that since the April lows at 481, the SPY has been walking up. It's the red line, the 20-day moving average, in a really strong uptrend until it hit the October high at 690. And we know that was a 44% gain from the April lows up to this 690 October high. Then the trouble started. And you know, we're pushing our luck. It had been moving up at a really strong, good pace, higher lows and higher highs for all that time. So, I mean, news or no news, you're pushing your luck. After that, it's good, but you got to be smart. After that high, the rally started showing signs of fatigue, falling to 652 in November. Then it gained energy and got itself back up here to 689. Then gradually started moving along the 50-day moving average for the most part, and got up here to the highs up at 696, 697. Then I drew this support line here, then started moving sideways, and it started looking pretty toppy here because you see a lot of indecision, and it's getting disorderly, and I like orderly. You can tell the indecision's coming in here. So it traded in a range here a little bit from 676 to 697. Then it started lower highs, started softening in February, and fell on the news of the Iran war to where we are now at 638. So you say, now what do we do? Well, if we get a positive news here, we have to look at this overhead resistance at the 200-day moving average may prove to be a point of resistance. And that's coming in at the moment at 661, and potentially, on up from there. Might be kind of a tough go. Might take some time to get that going. We have potential support back here at 634 from August and September. Actually, a couple of lows right here from August and September. But as tough as this downtrend is, at the moment, I don't know that it's going to pay much attention to those August and September lows, but we will see. Next week, we have quite a few economic reports coming in, including consumer confidence and retail sales, and we do have the jobs numbers coming out on Friday. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows the NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, including all the large cap momentum stocks like the Magnificent Seven. Now, when I captured this chart today, the Qs were trading at $563.84. That is 13%. That is in correction territory. Correction territory means you're 10% or more below the highs. And we are now 13% below the all-time highs up here. So in October here, and then in January, we hit highs at 637 for the Qs. Right now, they're trading below, of course, the red line, the 20-day moving average, coming in at 595 and change. The 50-day moving average, the green line's coming in at 606 and change. And, of course, it's below the 200-day moving average, which is coming in here at 594. Now, we know, you can't see it on this chart, but we know, but since the Qs traded at the April, a year ago, the April low at 402, it rallied from there in an uptrend from April all the way, and for the most part, walked up its 20-day moving average from 402. It rallied up to this October high at 637. That was a 58% rally. That was incredible. So from the highs up here at 637, after that, and we saw it start to weaken here, but after that, it did do kind of a little dumpster dive here, down to 585 in November, then rallied to 628 in December, then sidestepped and consolidated along here, along the 50 and the 20-day moving average. Then at the end of January, popped back up here to 636, the end of January, then dropped down to 594, rallied back up to its 50 and 20-day, but could not get over it. And this is why we talk about these moving averages. They can be very tough dudes. When they are support, they are wonderful, and when they are resistance, they are bad dudes. So it rallied back up, tried to get through the 50-day, couldn't do it, and then gradually went along, and then, of course, on news on the war, that was one of the things that started the in the Invesco the Qs down here to our present number at 563. Now you say, what do we do with this? Well, if we get good news, and hopefully we do, we're going to have to keep an eye out on this 200-day moving average coming over at 594 at the moment, and then up onto 628, and then that's resistance here. And then, of course, we'll have to meet up with up to the all-time highs up here at 637. We can look at 560 here for support. Looking way back August and September of last year, we can look way back there at potential support for the Qs at 560 back here, but I don't know. If we keep getting bad news, I'm not sure that's going to be able to hold. At the moment, I am on the sidelines. I know there will be opportunities when the dust settles. So we've got a lot going on next week, and truly no one knows what's going to happen in the next few days. No one I know, certainly not around here. So anyway, just be very, very careful when you're trading. What I'm doing now is I'm lining up a watch list of, and I'll talk about that in a minute when we talk about the next chart. Okay, our next chart today is a daily chart of the State Street Consumer Staples Spider Fund, the XLP. Of course, in good times they're okay, but in bad times the staples can be stars because, you know, we all need our food and our medicine, and no matter what's going on. So as you can see, the XLP here has got a little different price pattern than the SPY or the Qs, although that doesn't mean we're getting in here. But it's interesting to see because this is where people turn to a lot when the going gets tough. So the S&P Select Sector Consumer Staples Spider Fund, XLP, has 36 holdings. Top holdings include Walmart, Costco, Procter & Gamble, Coca-Cola, and Philip Morris. Now, when I captured this chart today, the XLP right here was trading at $82.15. Now, it is trading below its 20-day, the red line moving average at 84 and change, and below the 50-day, the green line at 85 and change. But look how neatly it's sitting atop the 200-day moving average, and that moving average is coming in this black line here at $80.96, so about 81. Now, if we look left on this chart and we looked at it longer term, you can see a little of it here, that the XLP has been moving sideways for the past few months. Certainly there were more exciting sectors to be in than consumer staples for the last few months. So more exciting sectors were receiving the traders' attention. So the XLP gradually, it was going along sideways here. It gradually fell down here to November low at 75. Then it climbed back up here finally to the 200-day moving average. But again, look at what a tough ceiling that provided and held down the XLP. It held it down until it kept going down to 76.50. It came back up, hit these moving averages, drifted down to 76.50, and then it rebounded right here in January. And this might have had something to do with Costco's move there, because it's the second holding in the XLP, and that was, I think, Costco. Well, I know it did. It made some lows, and then a lot of people jumped back into it. So it climbed back over in early January. It came up here, rebounded pretty hard, and again, I think that had some of it to do with Costco's move, and then moved up in a very dramatic uptrend here. Look at this angle. Whoop, I'm not drawing it straight, am I? This is a very steep angle that is moving back up all the way up to the highs up here in February, to 90. Now, you know that no matter what's going on, when anything climbs at an angle like this, as steep as this is, at some point it's going to start to roll over. That's just the way it is. People take profits. So it shot in a very steep uptrend up to the all-time highs in February, and then it happened right there when the war was announced. It turned over and fell all the way down here 9% down to the 200-day moving average, and back down to the current price at $82.15. Now, I suspect, because of the nature of the beast, that this ETF will rebound somewhat when the Iranian war is over. So while I'm not buying it here, I'm not buying anything right now, I'm going to put it on my watch list as long as it can stay above the 200-day moving average at about 81. I'm thinking of putting in a preliminary stop here at 80. I'm just not buying it now because if the war continues and it rolls down from here, I don't want to take that loss. So if and when the XLP can rebound and rise above, so if we get into it, if the war, we have good news, just for example, and next week this is bobbing along, and then with the war they say, okay, everything's fine, if that's a possibility, then the XLP will no doubt start up, and I'm going to, I'll have a very small position. If and when it can rise over the 50-day moving average, which is now coming in at 85 and change, and close above it for 3 consecutive closes, I will have a small position. I'll add to it then, and of course my stop will be a trailing stop. So you may want to put the XLP on your watch list. Now, we talked about the XME last week, and that turned out to be a good place to be looking, because those are metals, of course, and it's hanging in there and still on my watch list. I'm also watching the XLU. The XLU, that's the utilities ETF. because that's another place like Staples that traders go when things get tough, because you get paid dividends if you've got utility stocks. And I'm also watching the SLVR, or any kind of silver, SLVR, which is the Sprott Silver Miners, that's an R, ETF, because I think silver might be also a good place to keep an eye on. Now, it has pulled back here, and it looks like if it can find some support, that might be a good thing to keep an eye on. For the past 3 weeks or so, 4 weeks, we've been talking about the IGV, the software ETF. I told you I had to stop on it at 80. I did. I got stopped out of it. Now it's down at 77. I'm keeping an eye on it as everything moves along. So as I said before, I'm on the sidelines, and I'm not going to go long on anything in a big way until we get a ceasefire, or at least news that the war has ended. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become more a profitable trader, you've got some time now. It's a great time to check out my timeless training programs. How to bottom fish like a pro. I thought this would come in real handy in this particular scenario. Is the perfect training to check out right now. In this program, I show you exactly how to detect with high probability that a stock or an ETF is just about to reverse from a downtrend and move higher again. You'll learn how and when to buy, how to manage the trade, and when to take profits. Our new low price for this program is only $199. You should be able to make that back pretty quick. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular flagship product, 7 Steps to Successful Trading, to how to swing trade successfully, great, very popular program, how to trade the trend to profits, how to read charts, great for novices and brushing up, 3 winning setups, great for short-term traders, and again, how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, please be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.